Hello guys, we're back again with another one. Oh wait. Hello guys, we're back again with another one. So today I'm going to be analyzing Gbpjpy, the British pound. So usually I start my analysis from a daily perspective, from the daily time frame. Let me just remove this analysis that I already had there. You can see this was a move that happened yesterday. FOMC news. I actually missed this trade. I didn't trade this trade. So first thing that I always start with me, like I use my fib level to kind of like see where the market is going to reverse. You understand what I'm saying? So like usually I use the 78%, the 78%. So like when you draw your fib level, you mark the high and the lows, right? So like this is the highs and the lows. You can see we have high highs, high low, high high, high low. So like when the market reaches that level, the 78%, right? You can see what happened there. You see? Let me remove that. Let's go to a lower time frame. So now because we have already established that 78%, our level of rejection is that level, right? I can remove this for now. Now the most important thing is keeping your charts as clean as possible. So let me mark my highs and lows. That's my high and this is my low. So when you look at this structure, right, you can see that the market, for the market to return at that level, there was some sort of like a consolidation, but like the market was consolidating, building a wedge in a sense, like a channel, but like it's when the market just keep on moving like sideways, but forming higher highs and higher lows. So like we have this high, this low, this high, this low, this high, and then I'm trying to show you something right here, right? So when you look at this high there, right, but like there's a lot of story that this market is telling me right now. So like let me just first show you something. If you look here, we have this channel here, right? I'm trying to show you something. This channel here, we have that channel there. So like already you saw that we use our fib level and then we established that this level right here, it's our level with a high probability chance that the market can sell. You understand? So like okay, we've marked our channel right there. So if you look carefully here, we had a break of structure there. Let me make this thing clean. Or BOS break of structure. You can see that the market was pushing this level impulsively to the downside, right? So when you look at this thing here, you can see we had some sort of like a flag here. Market swept these highs. Let me just, because the thing is, when you're analyzing the market, something that you need to understand is that it has to tell you a story. You have to actually see. Excuse me, sorry about that. Let me just, yeah, that's the market sweep that liquidity. You can see price pushed up, down, right? Break of structure. Now we have a clear break of structure at that level. So the market here was forming like a wedge. So when we talk about a wedge, it's like when the market is doing something like this, Understand? So like it's a channel, it's like a ascending wedge. So like when you look at this here, we have that, we have this. Understand? But I'm gonna remove that because I'm trying to like just look at structure right now. So like already price has broken this level right here, right, which is our BOS, which is our break of structure. This, which is our break of structure. But like this trade could have had like a high probability set. It could have been a high probability setup for a sell at that level if the market had swept these highs. If it went up and the wick just did something like that and it doesn't close above the this level right here, that key level right there. So like now, okay, fine, we have a break of structure at that level, break of structure. So now let's use our fib level to establish our level where we can start looking for opportunities. So like when you look at this thing, so like we have 78% there, right? So the probability and the probable thing that can happen with this market right here, the market can retrace to that level right there and then sell. But what you need to pay attention to is not just the market retracing to this level right here. You have to ask yourself a question like, is the market getting to the level correctively or impulsively? So like when we talk about correctively and impulsively, it's something like this. But this is the bigger picture of it. You can see here, right? Just right here. That's correction. That's corrective. That's correctiveness, right? This is an impulse. Yeah. Right? So if the market goes up there, going like this, right? It's showing exhaustion. It's losing momentum. You understand? So like there's buyers that are on that level right there. So why am I saying the market is going to go to that level and then sell? You understand? So like you have to understand something, right? The market, when the market moves, it moves in equilibrium. There has to be like a balance. When there's no balance in the market has to go back and close the imbalances. So like when you look at this here, right, this is our imbalance. I'll call it the let me just say IMB, right? Imbalance. Just remember that it's imbalance, right? Yeah. There's an imbalance there. There's also an imbalance here. So like when we talk about an imbalance is like a 3 candle pattern. It's when the market, when one candle doesn't close the gap between the next candle. Like for instance, you see here, there's just a straight line. It's just a straight impulsive move to the downside. So like when you look at something like, I'm trying to find an example, the proper example here. So when you find something like this, right, you can see like this week, everything is balanced. There's no balance here. So like the market is going to go up there to kind of like balance the market. So like what we can expect from Gbpjpy is for the market to correct to this level here. So when it comes to the way you enter, right, you have to ask yourself a lot of questions like, okay, fine, this is a level that we are looking to sell our market, right? So you start asking yourself why are you supposed to sell the market at that level? Like first, it's our potential level for sell zone here, right? Because of the fib level. You understand? I'm not saying this is the entry trigger to be looking for sales, but you have to understand something, right? When you are analyzing the market, you have to be able to tell a story. You understand? You have to really be able to tell a story, because like, for instance, let's say the market does do what I'm saying, moves here to this level. So how are you going to enter the market right there? You understand? So like what you must see, because this also like other strategies where people just put maybe a sell limit at that level, but I don't prefer that, because like I feel like I'm not going to be following what the market is doing. I'm going to be following what I think the market is going to do. You understand? Which is the wrong way to analyze the market. So when you look at this level right there, when you look at this level right here, right, you will expect some sort of like rejection. But if the market gets there impulsively like this, right, then you have to sit it out and just watch what the market is doing, so that you don't find yourself just being on unnecessary drawdowns. For instance, like here you can wait for something like this rejection, higher high, higher low. You see, like you can enter on the you can enter at this level or on the break of this low. Understand? Because the market is already established, it is giving you signs that the market is going down. So like there's a lot of signs that the market is going down. So the sweep of liquidity, corrective structure, and then a break of structure, and then corrective structure to this level. So like already everything's telling us that the market is going to sell, but there's also a probable thing that the market can come here and then it crosses the 78.60% of our area there. So like the market can come to this level, break that level. Understand? So when the market does something like that, it means the trade is invalid. You don't have to force the trade, you just let it be. It's very simple, this thing. You just let it be. So if we are selling, I think we'll be targeting these lows here, right? Let's be targeting these lows. If we're selling, we'll be targeting those lows down there up until these lows. So you wanna make sure that when you enter a sell at this level, like I said, but I'm not saying you have to just enter it blindly. You have to wait for confirmation. Very simple. See, RR have a potential RR, or I like to put my stop loss above the previous current high. You understand? So high or low. So like when you look at this, you can see the market is probably going to come to this level. Even if you see the market doing something like this, as long as it doesn't cross this level, it's still a potential selling market. You understand? So if the market goes up a little bit and then sell, and then high low, same thing that I explained, you look for selling opportunities. But if the market just push and it reaches that level, it's an invalid selling opportunity. So like you just let it be, and you wait for the market to print another structure for us to reanalyze and then find another opportunity. So let me just do this. So that's about it. See, it's very simple, this thing.